that jazz.
Oh, Lord.
Yep.
Here we go. 5, 4, 3.
Good morning and happy Wednesday. Today is the 26th and this is your Millennial Mortgage Update. I'm Mark Jones, branch manager of Directions Home Loan here at Cantera in San Antonio, host of Key Factors podcast, and also co-founder of ReviewMyMortgage.com, largest index of mortgage programs nationally. And today we are going to talk about a pretty cool topic that I believe everybody in the mortgage real estate industry is concerned about. But before we jump into that, I wanted to go over what today's interest rate is. As of today, we are looking at, as posted, 3.67, and this is conventional across the board all over the United States. So for those of you that gave me some good feedback on this, I want to explain that these interest rates are posted on Mortgage News Daily. There are many different places that you can actually find the daily interest rate. Unfortunately, they are not all accurate. They are all based off of who's paying them sponsor-wise to generate leads and things of that nature. So if you go to a nerdwallet.com or a bankrate.com, you'll notice that there's plenty of mortgage lenders right below there that are actually paying to get their name brought up higher on the list. It's important for you guys to understand that there's little bitty caveats to these rates that show the amount of points that you would have to pay in addition to the fees associated with that loan. So keep that in mind and don't take everything at face value. As we jump into the article of the day here, this article is brought to us by Content Solution Team over at housingwire.com. I am a member of housingwire.com because I believe it is the best and relatable mortgage news that you can find. And instead of having you guys go and read it, I'm just going to pull out articles from time to time that are relevant to what we're having in our market. So the article is entitled, "How Will Appraisal Technology Evolve in 2022?" As mentioned, it is written by the Content Solution Team. And it goes on to say, appraisal management systems need to offer advanced automation and configurable workflows that will react to changes quickly. It goes on to say that the FHFA announced last year that desktop appraisals will become a permanent, and Fannie Mae also just released guidelines regarding these changes. With fewer appraisers entering the workforce and the demand for appraisers continuing to grow, longer turn times are having a major impact on lenders. The good news is that there are a number of ways that technology can help. For the majority of appraisals, especially with more complex properties, it is still critical to ensure that a licensed appraiser plays a role in the valuation process. With an appraiser shortage that is causing delays across the country, it's time to apply more intelligence to the way that we get the right appraiser to the right properties at the right time. Very similar to what Uber has done with transportation and freight industry. With the right alignment of data, advanced algorithms, and automation can be used to optimize where and how appraisers are utilized. As we move into 2022 and lenders strive to optimize their operations and deliver frictionless and fast customer service, you can expect more lenders to continue to upgrade their tech stack. In terms of other innovations, be on the lookout for new advancements in AI and automation, new approaches to algorithms, order processing, and new gadgets to make appraisers more productive in the field. So, why do I bring that to you guys today? In our industry, over the past 2 years, we've felt it the most in regards to the shortage of appraisers. It takes an appraiser quite a bit of time to actually become an appraiser. We're talking years in addition to schooling and apprenticeship. We're not seeing very many new appraisers enter the market. I'm not saying that they're obsolete, but we as lenders, with the volume that's coming in, luckily refinances are kind of dropping off, so it leaves a little bit of space for purchase volume to kind of pick back up in regards to the speed on getting the appraisals done. But we're seeing things like 2 and 3 weeks in turn times. That's just not sufficient for the demand that's currently on our market in regards to accepting contracts, getting deals done in a timely manner, and what consumers are looking for. So as we continue to move forward in our industry, you will see something that is age old when it comes to evolution. Things will get better, things will get faster. We will continue to use the tools and the technology that we have available in order to help us optimize and make our processes more efficient. So hopefully this is good news. I'm hoping that they start to adopt it a lot quicker, as we saw in the recent 2 years with the refinance boom. Automated appraisals were coming into play quite often, but we were only seeing it with appraisals that had at least 20% in equity in them. Hopefully, as we move forward, we will begin to collect more data. Folks will be putting more homes on MLS instead of selling them on off market in order to have a good market analysis. So that's some bright news that's coming up in our industry, and I believe that technology doesn't really go backwards. You don't go to the Apple store and ask for the Apple III. It's always the newest and better and faster version of what we currently have today. So that being said, this was your daily Millennial Mortgage update with Mark Jones, the Millennial Mortgage Guy. Let me know if you have any kind of questions. You can reach us at LaCanteraloans.com for any type of purchase, refinance opportunities, or maybe just a mortgage review. Looking forward to the rest of the day. You guys make today count. Separate yourself widely from the pack moving forward. That's something that you would be willing to have a discussion about.
Because they didn't get it.
They
were
probably
like,
didn't get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?
Always check to make sure you're recording.
The record.
Yeah.